All right, it's 4:02. I'm sure more folks will trickle in. The call's being recorded, so if anyone wants to review it after the fact, if you missed the beginning, I'll try to note this again a little later on. The plan today is for Jake Freeman, with regard to Freeman Capital Management, to discuss his plan that was filed with SEC a few weeks ago, filed Form 13G a few weeks ago. We held a Q&A, I think it was 2 weeks ago, and let Jake share and respond to questions pertaining to the plan. Obviously, there's been increased interest in the security in the time since then, and given the change in share price, Jake may have some incremental thoughts to share with regard to his plan and how it pertains to the company. So I'm going to just read a disclaimer. I know Jake has to read a disclaimer. I'm going to reintroduce Wook Capital and myself, and then we will get things rolling. The plan is to roll through 5:30 Eastern time, so about an hour and a half, assuming we have questions for the entirety of that time. Otherwise, if we run out of questions, I'll wrap earlier. So thank you, everybody, for tuning in. And just need to let everybody know that Wook Capital Management, Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from your professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual. Jake, if you'd like to go ahead and get your intro disclaimer out of the way.
Sure, mine's not as brief, but the information in this Q&A session does not and is not meant to constitute a solicitation of a proxy within it. The meaning of the applicable securities law. The meaning is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on or in this meaning constitutes a solicitation, recommendation, endorsement, or offer by FCM, BVUI Holdings LLC, or any affiliate to buy, sell any security or any financial instruments in this or in any other jurisdiction in which the solicitation or offer would be unlawful under the security laws of such jurisdiction. All communications during this meeting is information of a general nature and does not address the circumstances of any particular individual or entity. Nothing in this address or comment constitutes professional and or financial advice, nor does any information addressed by FCM, BVUI Holdings LLC, or any affiliate thereof constitute a comprehensive or complete statement of all matters discussed or the law relating thereto. Neither FCM, BVUI Holdings nor its affiliates is a fiduciary by virtue of any person's use or access to the information provided here. You alone assume the sole responsibility of evaluating the risks and merits associated with the use of any information before making any decision based on such information or other content. By listening to or communicating at this event, you agree to hold FCM, BVUI Holdings LLC, its affiliates, any third-party service provider, or anyone else, or any third-party service provider liable for any possible claim of damages arising from any decision you make based on the information or other content made available to you for this interview. There are risks associated with investing in securities, investing in stocks, bonds, exchange-traded funds, mutual funds, and money market funds involves risks of loss. Loss of principal is possible. Some high-risk investments may use leverage, which may accentuate gains or losses. Foreign investing involves special risks, including greater volatility and political, economic, and currency risks, and differences in accounting methods. A security or firm's past investment performance is not a guarantee or predictor of future investment performance. In accordance with 17 CFR Section 240.13d-1, this interview does not create a group with any individual with respect to Bed Bath & Beyond. Any statement involving Bed Bath & Beyond, Jake Freeman is solely and wholly representing his views of FCM, BVUI Holdings LLC exclusively in his capacity as its sole manager. FCM, BVUI Holdings may be referred to as FCM, I, or we. This meeting is not a solicitation of any security, nor should be viewed in any manner as an attempt to induce you to buy any security. Furthermore, this meeting is not intended to influence the market price of Bed Bath & Beyond Incorporated. Jake Freeman is a passive investor under SEC Rule 13d-1c, and as such, doing this interview to clarify any questions and misconceptions investors may have with respect to this letter. Jake Freeman does not intend for any of his comments to change or influence the control of Bed Bath & Beyond, nor should be regarded as solicitation of votes now or in the future for his proposed plan. Jake Freeman will not comment on management nor any large activist shareholders in order to maintain compliance with SEC rules. That's all for me.
All right, Jake, while you catch your breath from that, let me just give a little bit of a background on why I'm hosting this conversation. So for those of you who don't know me and don't recognize the voice, my name's Rod Alsman. I'm the managing director at Wook Capital. You heard the disclaimer at the onset. We're a private investment fund. And just a little more context on who Wook, why Wook exists, how Wook came to be. I met John Kim. John Kim is our CIO and founder. In 2020, we came to know one another through social media with regard to our interest in GameStop. We spent many hours communicating with one another and others about what we viewed as a misunderstood opportunity in GameStop over the course of 2020. And what we really experienced was this incredible crowdsourced research. Participated actively in Keith Gill's Roaring Kitty streams. Had discussions with a variety of folks, some of whom are listening in this channel, to really dig up golden nuggets of information that you can't just glean from reading an SEC filing. Nuanced and information that we believe provided us with greater insight. And we ended up being somewhat of activists, I guess you could argue. I wrote in my personal capacity on behalf of 4% of shares outstanding, Ryan Cohen, in December of 2020, really showing after his November 2020 letter that we supported the initiatives he was proposing. Obviously, there was a settlement in January of 2021. Many of those who were involved in that letter writing went on to create the website gmedd.com in January 2020 and really put out for public consumption all of our crowdsourced research that we gathered over the years. So with Wook, we're really now looking to expand that crowdsourced research, build a community, kind of recreate that experience that we all had in 2020 of just enthusiastic retail investors kind of digging deeper than anybody else. Think that the charisma, the energy, it's clear that there's been a shift in markets. Obviously, the durability of that shift is a question mark, and obviously there's a lot of speculative activity that's not investment oriented by nature. We are investors. We buy businesses. We're not looking not to say that trading isn't the thing that's important or that shouldn't happen, but our desire is to uncover misunderstood investment opportunities and to share theses and to really create a crowdsourced environment for people to improve upon, hone, craft, and debate those theses, et cetera. So I think this sort of a venue, having a 13G filer for Bed Bath to answer questions about his plan. Jake came into the GMEDD server and really said, hey, I'd like to let retail ask me these questions. He had gone onto the BBBY subreddit and answered questions in that venue. And my desire with hosting this second conversation is to really just allow people to ask questions directly. That's not the type of access that oftentimes retail investors have. Often institutions have more of an ability to get access to large shareholders, et cetera. So our desire here is simply to host a forum. I will, having already asked many of the questions of Jake, I'll try not to be repetitive on my own, but I want to welcome anyone who's in the audience who has questions around Freeman Capital Management's plan. Obviously, Jake will be limited in what he can answer, and he will respond in kind with what he is and isn't able to respond to. But yeah, just to recap things again with Bed Bath & Beyond, I think many are aware that there's been several activist campaigns with Bed Bath & Beyond over the last few years. There was a successful campaign in 2019 that saw an installment of Mark Triton and new management, a new strategy that they rolled out, unfortunately, with COVID, threw a wrench, I think, in their execution. If we fast forward to earlier this year, RC Ventures, Ryan Cohen's vehicle, became the largest individual shareholder and successfully settled with the company for three board seats, two of which on the strategy committee, with a proposal regarding how they should move forward. Obviously, as Jake disclosed, he is a passive holder. There's no intent to have any impact on management's decision making or anything pertaining to that. I just wanted to set those that's what has brought us here. This company has seen its financial situation deteriorate as the macro environment has been challenging, the supply chain issues they've faced as they've undergone their transformation plan. And it's found their debt securities trading at significant discounts to par. The equity had been trading near all-time lows up until 2 weeks ago. And FCM had a plan that I'm going to try to multitask and pull it up and pin it here after I get done with my diatribe, has a plan to try to, as I would phrase it, create a win-win for both equity and credit holders. But I'll pause there. Jake, hope that's a fair backdrop. And if you want to expound on anything I mentioned while I try to locate and pin that file.
Sure. I think obviously we can't underestimate the price has moved significantly from when the plan was first released, significantly on a much shorter time frame than I possibly would have predicted. And I think that kind of is a good backdrop to kind of both. There's a lot of new people. Obviously, it's been active on other Reddits. And I think, it's important to kind of get some other people asking the fresh ideas, as well as kind of expand upon what these larger price movements upwards mean sort of towards the plan and towards my thoughts on its adoption.
Great. So with that said, I know some of the folks listening participated in the last Q&A, and as Jake noted, the price has changed significantly. And I guess I'll throw out the first question while folks queue up if they have any of their own. But I guess, Jake, when you presented the plan, I think the price of the underlying Bed Bath shares were somewhere between $4 and $6, and obviously the price has closed today above $10 per share. It looks like $10.51 is what I see at the closing price. So I know the plan kind of involved trying to find a way for Bed Bath to take advantage of the elevated volatility that's inherent in kind of the range of outcomes being quite wide, ranging from insolvency and bankruptcy and restructuring through to whatever upside range on the other end of the spectrum. I know that you're not going to comment on any plans that any activists pertaining to the security have put forth, but as it pertains to the change in share price, how does that change what you might deem the optimal solution for solving the solvency problem that the company is still facing? And I would add that there was reporting in Bloomberg last week that the company was pursuing private loans. Obviously, the share price has changed. That may impact management's thinking, and obviously Jake won't opine on management's thinking. However, management had or spokesperson had been reported that the company would provide an update by end of month. So I guess let's start off with that one.
Look, I'm obviously very excited to see what management has decided to put forth at the end of the month. And, I imagine given the stock price, I'm sure that will ultimately factor into their decision. I think ultimately the higher share price is a win for both equity and debt investors. It's significantly a win for equity investors, and I think it allows for dilution to occur to sort of get rid of the debt at a higher level. So before we were talking about warrants that were having strikes of $8 and $10. Now we can talk about warrants having strikes in excess of $15 to $17, which would significantly reduce dilution. I still think the high in volatility in the past couple of weeks sort of really points to the fact that the idea of sort of Bed Bath & Beyond monetizing that is certainly a viable idea. Certainly call and put premiums both have really skyrocketed in light of this. And I think Bed Bath & Beyond, especially around now, would be in a really good time to sort of capitalize on that. And I think what's even more important to note is sort of the convertible debt plan that was kind of put forward. Essentially, right now, that would have a dilution effect, I think, somewhere around 120 million shares. Now you kind of talk about having a convertibility option or more like the 16, 18 range. which means you'd have half as many shares in dilution. So essentially, it would be a very good thing. Obviously, higher prices is a good thing for Bed Bath & Beyond, and I think it provides them more flexibility. I think the underlying liquidity issues are still there, but I think this provides them with more time and more options going forward.
Yeah, I think optionality is key, right? We can observe that IPO markets have slowed down meaningfully year to date, given uncertainty in the macro climate, given the invasion of Ukraine, et cetera. Obviously, the proposal that was made by the 13D filer earlier this year noted different options pertaining to the baby, Buy by Baby, the specialty baby retail business that Bed Bath Beyond is the owner of. I think we talked about it last time, but one of my takeaways was that in a nutshell, the company, if it doesn't do anything, runs into some solvency issues come early 24 when the asset baseline expires, and that generally speaking, the plan is to extend the runway past that point, address that that cliff, address the 2024 bonds, and ensure that the company is not forced to dispose of that asset or otherwise spin or sell that asset in an unfavorable environment similar to the current conditions that they're facing. Is there anything you'd add to that or dispute with that?
Yeah, certainly. I mean, certainly in my calls with various institutions, vendors, and sort of representatives of vendors, I think potentially there could be signs of liquidity issues much sooner than 2024. So I really think that right now would probably essentially Bed Bath & Beyond without a significant or meaningful change in their financing strategy could be forced to sell the baby asset at a fire sale price. And I think this plan really provides a fairly simple way to avoid that scenario while significantly reducing the costs associated with the company in terms of interest expenses.
Yeah, I think that's good. That's good. I know nobody has yet put their hand up to come on up to speak. I want to make sure that anybody who wants to ask any question, please again be respectful, understand there. Hopefully, you can use some good sense to understand there's questions that Jake won't be able to answer, and that let's try to refrain from asking those. But if you have questions pertaining to the plan, pertaining to why this is advantageous prospectively relative to nothing. Now, as I know Jake mentioned last time, it's entirely possible that management has a superior option that they've not yet publicized, and that is an option. But I don't yet see any. Okay, great. I got Nate. Come on up and please ask away. You're on mute.
Okay. How's it going, Jake? You had mentioned potentially strike prices from 15 to 17. What does that mean for equity?
It provides significantly more kind of runway for equity to kind of the price to go up without having any real dilutive effects from the warrants. The warrants are fairly long dated, so people won't really exercise them till the mid 20s. That obviously is a lot better than when people might start exercising them around 15, 16. So essentially provides equity at another $10 of upside. About $10 in upside compared to the previous kind of iteration. And basically, it allows for sort of people to get above their cost basis in that sense, so it might be more favorable to shareholders. Additionally, it's above certain large shareholders' cost basis. But there is a real kind of cost if Bed Bath & Beyond doesn't do something similar to this. So it's certainly a balancing act. Certainly, they're capping equities upside kind of in the short to medium term. Really to kind of prevent a real fire sale issue kind of in the short term. Because, I mean, even if Bed Bath & Beyond, they do have a lot of assets, not all of them are liquid. And sort of, that's a really important thing to note. You don't want to be fire selling your assets in this current macroeconomic environment. So the alternative to not doing a plan like this is a significantly downside for the equity investor.
Thank you.
And I think we touched on volatility a little bit. I hadn't looked at it today yet closely. However, I looked at a market data provider's historical volatility data on Bed Bath Beyond, and it was close to the 100th percentile. I think it was on Monday of this week that it was at the 100th percentile, made all-time highs in terms of the implied volatility throughout the options chain. I'm looking at data from TD Ameritrade right now, and for example, the at the money put options for January of 24, it's reflecting an implied volatility of 166%. So it's a situation where volatility is extraordinarily high, and I believe that that's a way in which the company can capture some of that by virtue of being the one writing those warrants. And Jake, please correct me if I am wrong there.
No, certainly. Basically, the company is able to sell these warrants, and they're analogous to selling a call option. Basically, the company is selling covered calls is kind of a way to think about it. And right now, obviously, without endorsing any strategy, covered calls certainly, as a percentage of, are very, maybe not necessarily covered calls, but calls in general have a extremely high premium, which means that the company would generate a lot of cash effectively. The warrants are being used to pay bondholders in lieu of cash. So obviously higher volatilities mean that you can pay bondholders the same amount of money, but by diluting less.
All right, good stuff. Good stuff. Any other folks? Again, please don't be too shy. So again, as I kind of mentioned though at the onset, we're still trying to get our feet under us in terms of structuring these sorts of conversations. My goal is in the future to have this running on both YouTube as well as Twitter in order for people to submit written questions. I know some people are shy. Obviously, we don't currently have that for this afternoon's conversation. But if anyone did want to submit any questions and want to DM me at Rod Alsman, my personal account, you can DM me, or at my at the Wook Capital handle, either one. That way, if you'd prefer to submit a written question and you'd rather not chime in auditorily, can relay that and have Jake respond. But again, don't be too shy. He and I don't bite. If anyone else wants to come on up and inquire about the plan or any other questions for Jake that hopefully he can answer, please don't hesitate to do so. While we wait and see if anyone has any additional questions, I know, Jake, you'd made a comment about there being a threshold by which there may be a superior or preferred choice of using a rights offering instead of warrants for minimizing dilution. Not to ask you to opine, I guess, on too much specificity with that, but could you maybe share some thinking around, when would or why a rights offering might be superior? And obviously bearing in mind a lot of the folks listening may not necessarily be familiar with that. So maybe if you could just speak about rights offerings versus warrants a little broadly, and then just some of the thinking going into that.
Sure. So a warrant essentially is an option that's dated for a fairly long period of time. I think some of the ones in the plan are 5 to 7 years. So they're obviously more long dated. And the difference is a rights offering is sort of an option that's in the money already, and it has a very small maturity, so it might be 60 days. So my calculations sort of show that around $20 kind of is where a rights offering could be favorable. A rights offering would give the company the money immediately, and thus, instead of issuing warrants at, let's say it's at 20 and issuing warrants around 30, 40, you could have a rights offering where essentially you're paying the bondholders the same amount of money, but the options are in the money. So the bondholders have to exercise and give Bed Bath & Beyond more money. So essentially, that would allow you to sort of avoid some of the debt issuance and ultimately result in less dilution by essentially giving the bondholders the same amount of money you have to give them, but essentially they're getting $20 worth of value, but they have to pay $15 to get it, which gives Bed Bath & Beyond $15, which obviously means they potentially could not have to do a bigger bond offering that was suggested.
Good stuff. I do have one question that came in. It's not specific to the plan, Jake, but to the extent you're willing to answer it, we'll have Mahmood wanting to know what you do in your free time. What are some of your favorite activities?
I play video games. I cook. I watch TV. I go out during when I'm at
You don't drink
university.
wine, though, right?
I would never engage in any action that could be deemed illegal by various drug enforcement agencies. No, definitely not. But during the school year, I'll go out. I am involved in a lot of clubs at my university, mostly relating to finance, but not all of them. Robotics is something I like to do. So I guess that would kind of be what I do in my free time.
Man of many talents. Again, anyone who wants to come up and ask any questions for Jake that he is willing to answer, please continue to submit them either via text or come on up. Don't be too shy. Yeah. Yeah, I know, Jake, you mentioned in the GME DB Discord you've made a few trips to Bed Bath. I guess just speaking about, I know you'd mentioned on the last time we talked that you like carbonated beverages, and that's a product that you buy there. Yeah, I mean, I guess maybe what have you seen the last few times you've at least scoped out your local store?
Sure. The local store actually for me is actually the closest store to the company's headquarters, or at least I think so. So in theory, it should be the best. But essentially, when I go there, I see a lot of positive things. They have a lot of very valuable inventory that even that they can sell over time. I think potentially fire selling it could raise some cash. Obviously, we don't want them to have to fire sell anything. I think from a more overall standpoint, I'm not sure if management's commented on this, and if they have, I don't think they have. But essentially, I think there's a lot of potentially too niche items at Bed Bath & Beyond. I think they're sort of trying to target some areas that they don't really have a competitive advantage in. I think their competitive advantage is really in the medium scale, like home appliances and other home goods. Obviously, the beds and baths. I have to say, I do like the baths at Bed Bath & Beyond. I'm a big fan of taking baths, I guess. But I think, like, for example, there was a product there that it was like a foot warmer and it was like $300. And it seemed very gimmicky. And obviously, I think Bed Bath & Beyond should focus more on where it has the competitive advantage, which I don't think is in those kinds of products. Those kinds of products, I think, are more like Williams-Sonoma or Crate and Barrel as compared to Bed Bath & Beyond.
Yep, Nate, go ahead. Sorry, I brought Alpha Hound up as well, but Nate, please.
Yeah, quick question. You had mentioned Williams-Sonoma. What do you, in this regard, what do you think, about the recent partnership with Loverly as a, distinguishing advantage?
I think any partnership that Bed Bath & Beyond has with other retailers or other sort of distributors is a really powerful thing for Bed Bath & Beyond. Ultimately, Bed Bath & Beyond wants to leverage as much as they can to sort of move inventory. That's a really big name of the game for Bed Bath & Beyond right now, just moving inventory and getting it to market. I think any partnership with really anyone is a positive thing for them.
Thanks, Nate. Okay, Alpha Hound, my friend, please go
Hey.
ahead.
Yes, and thank you both for setting this up and taking the time to do another one of these. So Jake, obviously the stock has moved a lot over the last 3-4 trading sessions. Given the fact that short-term volatility remains elevated, do you think that this is reflective of informed flow, or is this just retail speculative mania?
I believe that when a stock has the potential to have a quote retail mania or other large market moves potentially caused by short squeezes or other sort of manipulative tactics, it certainly would elevate the volatility of Bed Bath & Beyond. Certainly the persistently high implied volatility is something we have seen and I've been tracking since I first started looking into the Bed Bath & Beyond area. And I think that's not going away anytime soon. And I think sort of the term structure of implied volatility is still very high, even going out to 2024, which is the kind of the farthest options that are publicly available out there. So I think it's persistent, and I think it'll likely stay persistent unless there is a real epistemic change in sort of Bed Bath & Beyond's categorization.
I would add, just with regard to the term structure, I had observed that the front end month implied vol had risen disproportionate to longer dated strikes. That was my observation. And as I noted earlier, on Monday morning in particular, implied vol appeared to rise quite meaningfully. It would be speculating to comment, but it did appear that other securities that are often lumped into the meme basket saw similar type moves. So obviously no insight on my side of things of why that was. I think just to opine on the Wall Street Bets Reddit sub has a lower threshold for participation than it used to, and I know I observed a significant ramp in activity on that subreddit with regard to Bed Bath Beyond since it became eligible last week. So just some thoughts that I've observed.
Awesome. Thank you both.
Mr. Sick One, sir, please go ahead.
Hey, Rod. Hey, Jake. Long-time listener, 15th-time caller. Hey, Jake, I just want to say thanks for doing this. I got like a two-part question. Like, I took a look at your filing, and I just noticed that you're 100% in Bed Bath & Beyond for submitted for FMC Capital. One, how the hell how do you even see same with that much risk? Like for me, like I'm able to like tolerate maybe like 10 or maybe even 25% of my portfolio, but 100% is just kind of like nuts in my head, like those crazy YOLO plays. And two, how'd you find out about Bed Bath & Beyond as a play, or like how'd you develop the thesis in the first place?
Sure. So to start off with the first thing, all money committed towards the Bed Bath & Beyond endeavor is specifically there because people understand the risk of that play. Certainly, concentrated positions on a broader portfolio would obviously be an issue. However, this is sort of a specifically raised capital. So all the monies raised came from people knowing of the risk that could occur. So that's how I stay sane on that risk side. That being said, I think the second part of your question was sort of how did I kind of see this? So after their previous earnings announcement, and even before then, I was sort of looking at Bed Bath & Beyond. What sort of attracted me to it was Rite Aid, actually, in a completely unrelated manner. I was looking at certain capital structures, and ultimately I felt that the Bed Bath & Beyond had a lot of room to run because I felt the stock was really priced for bankruptcy, and I think with their right change of their capital structure, they could really alleviate that risk and really propel their stock higher, which is ultimately how the disclosure came to come out. And I believe that both having public perception of it is important, as well as having obviously exposure on the equity side.
Thanks a lot.
All right, good stuff. Good stuff. I've got no other questions that I'm seeing. I did have a question in the GMEDD Discord server, which again, if you wish to join, it's a public Discord server. At GMEDD is in the audience, and the link to join the server is on the profile. But I think there was a question at what price it would be better not to apply the plan. I think this was already answered. Around the $20 mark is where a rights offering may be a superior path than warrants. But I guess the question is maybe just on the math side. if Jake could explain in simple terms, why would it not be better to just do higher strike warrants rather than a rights offering?
Sure. So ultimately, warrants include basically are essentially you're paying bondholders with warrants, essentially allows you to pay them in lieu of cash, but you don't receive any cash at the time. Whereas a rights offering provides Bed Bath & Beyond with immediate cash, and well as providing that value to the bondholders. So at that part, if let's say you have one right versus one warrant, let's say the warrant is priced out accordingly and it's, let's say, $3 a share, it's a 30 strike, and the stock's at 20, you could essentially accomplish the same idea with a right in kind of overall fully diluted terms by issuing one right at the $17 mark. It would result in immediate dilution today, but the company also received $17 today instead of potentially receiving $30 farther down the line. So this would ultimately allow Bed Bath & Beyond to raise the $1 billion that they sort of need without having to incur that second part of the plan, which revolves around issuing a new debt.
Excellent.
So that's sort of why the rights are better. Obviously, I mean, I think it's dogmatic to kind of think any particular plan would be right in every circumstances. All we can do is sort of react to what it is right now and try to evaluate what we think is best.
100% makes sense. Philip, I hope that answers your question. You were able to hear it. Again, the call is being recorded, and it will be available for 30 days through this link on Twitter. I do intend on archiving this as well as the previous call that I hosted on my @RodAlsman account to be made available for future consumption from the Wook Capital website, but that is still in works. So I don't want to say that as a certainty, but that is what I expect. Very good. I'm still pending any more questions. I've got a message request from Cool Feet Matt. So his comment is that Bed Bath Beyond has been very hard to comprehend for me. It has a 5-year high of $35. I actually think the 5-year high is higher than that. A recent low of around $5 and has recently shot up 70% in the past 5 trading days. I am wondering to hear some insight into these swings. Wouldn't it make sense to see where this upswing goes in the next few weeks before trying to fund a longer runway? I would, before Jake responds to that, I would kind of piggyback on what he just said at the end there, that it's a reaction to what the market is presenting at any point in time, and it is challenging for a board with a fiduciary duty to try and anticipate any moves up or down in the underlying, and really has to act on where the price is at that point in time. But Jake, if you have any thoughts with regard to that question. You're on mute, by the way.
Oh, oops, sorry. I think to kind of add on to that, if we had a crystal ball and knew exactly where the stock price would be at a future point, obviously there wouldn't be a need to have an actual business that would be the business. But unfortunately, management has to be more concerned with, so they can't really just assume away that the market would either even hold this level or potentially hold a higher level. They could plan for contingencies in the event those occur, but ultimately they can't assume that in 3 months or a month or a week that the market will be at any given point. So that's a hard problem for management. I do think that there could be potential for structuring or financially engineering the deal that they do to sort of account for the possibility that occurs. And I think that would sort of help bridge those concerns, but it would have to be more on the contingent basis rather than sort of directly. That basically means that if it occurs, something else is triggered, but if it doesn't occur, you're still set. Because ultimately, in my conversations with some vendors and such, there's a lot of stuff there that liquidity really needs to get fixed, and that is a very imminent issue. So as much as we'd like to wait around even for a few weeks, that is there's every day that we go without a liquidity solution is a serious concern. And I think it is better for the company not to take that risk and potentially allow for that advantage in the terms of their financing deal.
All right, very good. This is unrelated to Bed Bath, but there's a comment on Twitter. Jake, last time you mentioned a possible other investment into a biotech company. Any progress on that? When do you expect to disclose or go forward with that, to the extent you're willing to answer?
Sure, I will answer that to some extent. Actually, the answer is probably tomorrow. And right now, sort of the way that it's being structured from a legal standpoint, it won't be a 13D filing per se at this time. Sort of the idea here is to give management of that company an opportunity to sort of address the issues we'll raise. It will be a press release open letter, and sort of it will come out first on Reddit. I plan to kind of give it to the retail investors first prior to sort of all the institutions. But yes, so that's sort of the update on that, and you'll see a lot more about it tomorrow.
All right, very good, very good. So I'm got Alpha and Nate. You guys are welcome to ask any other questions. Anyone in the audience who has any questions, please feel free. Again, if you are on a desktop, FYI, you cannot join as a speaker. So if you're on a desktop, please message me at my personal at Rod Alsman, or tag me at Wook Capital, and I can then forward the question along to Jake. I think I have another one. Oh, no. Well, the detective just was saying thank you for answering. Trying to see if there were any comments on Twitter mentions. Not seeing any. We got another request though. Paris, bringing you up. And please go ahead with your question. And you're on mute, Paris.
Hey, thank you, Rod, for bringing me up. Just trying to get the overview of how do you think Bed Bath and Beyond. Like, I have been an active investor in GME, not really following Bed Bath and Beyond, but I've been looking in how all these stocks, meme stocks, as they say, they react all in accordance to in one line. Just want to see an oversight. How do you look the company would be, and like what are we looking for as financial? Not really up to date on this, but I'd like to have an overview if that's possible.
What exactly was the question? Sorry.
So, I've been an active GME investor. I've been researching from last January since the squeeze, and didn't really pay attention to Bed Bath and Beyond. But I've been noticing all these stocks have been, on the same basket kind of thing. Just wanted to get an overlook, like where do you see this stock, and why do you think it's the way it is, and what kind of financial problems are being facing by the same stock?
Sure. I think that there is probably a lot of correlation. Obviously, when certain stocks are sort of lumped together, they do have a correlative effect. You see something similar in even large baskets of ETFs and indexes. I think, given the fact that media has really put this all together as one large, I guess, basket, I think there is a correlation. I think anecdotally, as I've been kind of looking, it certainly seems like there is a correlation. I certainly think that's not necessarily a bad thing. I think it basically means that people who like Bed Bath & Beyond also tend to like AMC and GameStop, and I don't see anything wrong with that. I certainly enjoy going to the movies and video games, as I think I mentioned earlier. And I think that just ultimately potentially the sign there. I don't necessarily have full optics on it, but I did do some empirical modeling, and I didn't get as large a results. If you kind of strip out the sort of January and February, you don't get a statistically significant result, but anecdotally, it does seem like there is something like that.
Perfect, right on. Thank you. And what do you think, like with the financial, like you were mentioning about we are facing an inch of bankruptcy, and it's more of a debt. Like we are trying to offer, like raise debt by offering more shares or something with Better Bath and Beyond. Where do you guys see this going through? And Rihanna and also onboarding the ship on this stock. Like, if you can give me an overview, like where do you see this, and like what kind of a turnaround plan is he working on, or what's happening with the stock?
I'm not sure if I can comment on this. I'm also not 100% sure of the question. I'm sorry. My thinking is you want like an overview of sort of the debt plan. So the debt plan is basically it's essentially trying to exchange debt in a way that reduces Bed Bath & Beyond's total debt right now in exchange for some capping on equity's upside. Obviously, there is no perfect solution where everyone is completely better, but I think certainly equity and debt is better over the short to long run under this plan.
So I'll, Paris, I think answer a little bit of your question. Unfortunately, my web browser is giving me a headache, so I can't pull up my Capital IQ. But I wanted to kind of opine that the business from an operating cash burn perspective has been challenged really since the onset of COVID. They do have liquidity in the form of that asset-backed line that they can tap, but as they sell down inventory, I think that the amount of liquidity that ABL provides will be reduced. I think as Jake was opining or responding to a prior question, in his conversations, it sounds like there are concerns, not to put words in his mouth, but there are some concerns from vendors about the company's liquidity situation, which is why getting a resolution sooner versus later is beneficial for them as they need to stock up, presumably for the holidays. That's me speculating a little bit. I obviously have no insight. I've not personally had any conversations with Bed Bath.
Sure, just to add some things, like I know many in the retail space are somewhat incredulous of my intentions and my plan. I think that it really, and unfortunately, a lot of it that I know is sort of I can't discuss, but I certainly would say that liquidity issue is an extremely important problem. And I think people need to understand that it's really important to solve in the near future. And, there could be a better way. And if there is a better way, that's amazing. But certainly one way or another, it needs to be solved within the month, which I think they're doing in kind of an omnibus sort of update. And I would be
Hey, I had
remiss to
another
see
question. That's okay.
Sure.
And to follow up, Jake, to your response about the meme stock basket, and you said something to the effect that folks who like GameStop like Bed Bath and Beyond, and that's okay, and I think that's a good statement. I was curious if you thought the inverse of that was true as well, that the folks that don't like one of these meme stocks tend to dislike the others as well.
Certainly that could be an issue. Certainly if people shorting one of the stocks probably would want to short a basket. Obviously, if people feel that a group of stocks is overvalued, they might short a basket of it to kind of minimize the risk to any single one. I could certainly see the converse of that also being true as well.
Thank you.
And just to share, I'm looking at, obviously this is an external data provider. This is S3 Partners data, but I look at the short interest that they are reporting in their data set for Bed Bath & Beyond has steadily increased, even with the share price increase. They're showing a short interest of 32.34 million shares as of the open today, which their float calculation reflects 52.5%. So obviously it is heavily shorted. There's a reason it's heavily shorted, right? Given the solvency questions. And to personally, Alpha, respond to your comment, I think there's a view, and I know you and I have talked about this extensively over the years. You and I first talked about GameStop, I think, in 2017. We obviously talked about it again in 19 and 20 and so on. But specialty physical retail, it seems there's a crowd out there, if you will, that has a viewpoint that those are structural zeros, or many of them are structural zeros, and they've had that viewpoint for many years now. Whether I say they, simply folks that are short, whether they are in all of these names, obviously I have no unique insight to that, but if we're looking at folks that fit that same sector, it's logical, I would think, that they would express that viewpoint similarly.
Thank you, Rod, and thank you, Freeman, for your insights.
Thanks, Paris. All right, CLJN, please go ahead. You're on mute, FYI.
Jake, you were touching on the timing, I think, related to Bed Bath, potentially looking for a solution. I thought you had said something in reference to, that maybe being important for that to happen this month. Can you just kind of continue on what you were going to say there?
Sure. So what I'm trying to say in many words is that there's a lot of vendors who are not and do not want to give Bed Bath & Beyond sort of financing for their wares. And some of them it's because Bed Bath & Beyond is late on. That's something I've heard from multiple analysts. So that's not in any way confidential, but that's something I've heard from some vendors. So it certainly is an issue. To hide the liquidity issue is irresponsible, to say the least. And I think a lot of people think that, I'm overstating the liquidity issue, or that they can go to 2024. There's serious liquidity issues right now. And I think we need to recognize that. And, the question is, I think Bed Bath & Beyond dealing with the liquidity issues is not necessarily a bad company to buy. I'm not saying that you should or shouldn't. I think it's just important that they solve them in the near future. Otherwise, there could be a significant sort of cascade, which could be really harmful, obviously.
Yeah, hopefully that gets to that, to the point of analyst reports on the issues. As I mentioned earlier on in the conversation, the latest I've seen publicly is from the company spokesperson that there'd be an update by end of month. So presumably, I have no unique insight into this. I've, again, not conversed with the company. Presumably, they're considering all options, including the FCM plan, any internal proposals. As I think Jake was noting, it does vary, right, depending on where the share price is, what the best decision at that point in time is, and they can try to set up contingencies. If X happens, then we'll do Y, otherwise Z. But to that point, we're coming up on the fourth quarter. For many of these retailers is their peak season. They have to stock up on their wares in order to sell them to customers. And if vendors are having concerns about being paid, or they're late on payment from the company, they may simply opt not to do business with them. And if Bed Bath has empty shelves, right, then you can see where this goes. So it does sound like there are concerns. And I know in last week's or 2 weeks back when we had this call, I made some comments about Placer.ai geolocation data that I had seen KeyBank Capital Markets report, wherein in at least July, the data points in the weeks leading up to July 28th, Bed Bath, from a foot traffic standpoint, was underperforming its peers in the retail space. It was the worst performer in the peer set I saw, compared to both year over year as well as 2019. So obviously there's always noise in that sort of stuff, but just anecdotally / empirically, from what I've been reading, there are real headwinds to the business, and I think it makes sense why FCM has proposed a path to resolving some of these solvency concerns that appear to be valid.
I think from a financial standpoint, if they can solve some of these liquidity issues in the short term, they're certainly having the ability to really capitalize on that and move forward in a very advantageous way. So I'm not necessarily trying to get down the stock. It's just, it is a serious issue, and I think it's something that I think on the institutional side and management side is certainly recognized. I think to some extent I've certainly felt that on the retail side people are underestimating the liquidity issue, and I think that is certainly something to not underestimate.
So Jake, what's your end game? Like, how long are you willing to wait, if there is inaction on the part of Bed Bath?
I think management will have to have a plan of some sort, and that's certainly almost guaranteed, or in my belief is pretty much guaranteed. I certainly think management definitely knows the company better than I do. They have access to a lot of data that I can't get access to. So it's certainly not, it's certainly possible and probably very likely that management will have potentially a better plan or a combination of the plans or some sort of facilitation thereof. So that's not necessarily an issue there. As for time frame, I can't really comment on that.
Perfect. Thanks, Jake. And then just shifting gears, I have a question from a group that in relation to the biotech that you mentioned yesterday and releasing on Reddit, where will that be released? How do you plan to execute that?
The exact details, I'm actually not fully sure, but obviously I'll release it first on all the subreddits that can pertain to that particular stock. And then whatever other, I guess, Reddits, I think Super Stonks is fairly generous with who can sort of post. I know that Wall Street Bet has a certain minimum requirement, so I will be avoiding Wall Street Bets, but certainly the main Reddits that are allowable to sort of any security.
Great. Thanks, Jake.
Right. I am looking through my messages. I don't see any other questions. Alpha,
I have a
question.
Yeah, I have another. This is a softball. So Jake, you've been very active on the GME DD Discord, and thank you for that. I found your commentary quite interesting. Is there anything that you've learned from the surfer, or any interesting observations? Have you enjoyed your time on it?
I certainly enjoyed joining the server. I certainly enjoy interacting with a wide variety of people, and I hope to continue sort of discussing with a wide variety and sort of diverse group of people. Certainly a different perspective than a lot of the institutional perspectives that I get. Certainly a lot of institutions at least aren't going to criticize my plan right in front of me, but Reddit and Discord seems to be willing to do that, which is a good thing. I encourage healthy discussion of things, and I think criticism is important to sort of further, and I mean, ultimately all want what's best for Bed Bath & Beyond. We want to see Bed Bath & Beyond succeed and thrive. I think when people kind of realize that that's all everyone really wants in these things, and I'm sure there are people who are actually against that, but I can assure you I have nothing but the best intentions for any company that I really invest in. I'm not one of those people who believes in being predatory to companies. And, I guess that's kind of there on the learning standpoint. I think certainly I have been really interested in all the options sort of that people have been discussing. People have very well thought out theories about options. And I really do look forward to kind of doing more academic research on a lot of the theories that I've been seeing. Certainly the net delta numbers that I see every day that people are talking about, I certainly am really interested to see sort of on a more academic side or in kind of a more rigorous academic setting, if, how indicative they are. They seem to be something that people have relied on. They seem to be something that people believe in. I really am interested to kind of see sort of how that works. And I'm really interested to learn more on those aspects. It's certainly not something I really saw in a lot of the institutional side of option trading.
Awesome. Thank you.
So I just want to kind of share a little personal thought on what Alpha was just saying. I know some folks listening, Alpha knows, I personally first started just talking on the internet about stocks in 2018 on StockTwits pertaining to GameStop solely to understand what other people were thinking. And I think that's one of the great things about this sort of open discourse is to Jake's point, an analyst in the institutional side or whatever may not be willing to tell him, I think this is, idiotic or otherwise to his face. Whereas, maybe amateur retail investors are much more willing to be forthright in their thinking, and obviously may be wrong, may have may have a different background, may have different perspective on things, but I think that this is again why we're doing these sorts of, or I intend to do these sorts of open mics, is to let everyone's kind of different perspective get heard. Ideally, you're going to get different insights from the broadest array of people and perspectives, as opposed to just being stuck in a group think chamber. It's hard if you're just trying to bounce ideas off yourself time and time again. I think it's healthy and helpful to get those, and hopefully people are at least being respectful. In the GMEDD server, I will ban you otherwise. Just kidding, not really. But it's incredible, to see over the last few years just the uptake in people wanting to engage online, and I hope we can continue to do our part to support that. So little thing there. I don't have any other questions of mine. I don't see any other questions in my inboxes. I know we said we would end around 5:30. It's 5:03. So for the folks who are up here as speakers, if you have any other questions, please, you're welcome to go ahead. If there's anyone listening who's yet to have their question answered or who has any other questions, would certainly invite you to DM me or to come on up as a speaker. Otherwise, I'll let Jake close out if we don't get any incremental questions, and we can let folks continue their afternoon.
One more question. So I watch time and sales pretty steadily, and as of the last couple days, about 15 minutes before open, we'll see the bid and the ask spread as wide as $2, and I've got some pretty crazy screenshots. First, have you noticed that? And if so, what do you think of it?
Ultimately, I don't pay attention that much to pre-market trading unless I'm actively trading security. And so I actually haven't seen this. I can say that, going back in my recollection of time, there's certainly been times where I've seen bid asks where you have like something that trades around $10, and you have a bid of like $1 and an ask of $1,000. So it's certainly not uncommon. I think potentially that could reflect certain market participants trading kind of before sort of 9 a.m. and then sort of not trading in the interim between 9 and 9:30. I certainly know of institutions that do that. So I think that could be probably reflecting there. It could also reflect kind of the risk that people associate with sort of a lot of market orders. Sort of people will use market orders. That's why sometimes we'll see a big bump in the stock price or big down in the stock price at the open. So that could reflect that as well.
Thank you.
Thanks, Nate.
I guess one more softball. I saw something this morning about a certain CNBC anchor suggesting that Bed Bath should sell shares today at this price. Obviously, given your plan, I don't imagine you think that'd be a good idea, but do you have a speculation as to why he might be saying or tweeting that?
Look, Jim Cramer probably follows a lot of companies. Certainly on his shows, he will mention dozens of companies. I'm not sure how much of he personally follows. Certainly, if you're not following Bed Bath & Beyond closely, and you might believe that a $10 price is a good spot to just do a shelf registration or not the money offering. I personally believe that wouldn't raise that much money. For example, if they wanted to raise $100 million, they'd have to basically issue 10 million more shares right now, and that would probably not only signal sort of a negative confidence by the company, but also significant dilution. Whereas a lot of the strategies that I proposed would provide a lot more bang for your dilution, so to speak. So,
and is it safe, Jake, to say that the key with your plan versus say that at the market offering is that the company is the seller of volatility and is able to capitalize on the elevated volatility levels?
Yes,
in essence.
That's certainly something that the company is able to basically let people buy calls in the company, and the company pocket the premium. And it doesn't have to dilute immediately, which is an important fact. In fact, it only dilutes at advantageous prices. I think let's say they were to sell 10 million warrants for a $25 strike, certainly that would look a lot better than if they were to just issue 10 million shares right now. They could get sort of the money when they kind of reaches the $25 while still receiving a decent amount of money today.
Hey, Ina, go ahead.
Yeah, sorry. Hi. You probably already answered that question. I had a question regarding the liquidity issues of BBBY. You don't think there's a bankruptcy risk this year?
I certainly think there is a serious risk of bankruptcy this year. I think that there is a solution though, and I think the company will certainly solve it. If the company does nothing, I think there's a serious risk. I think the company does something, even if it's not the most optimal solution, it probably would take bankruptcy off the table until 2024. But again, there is a serious sort of risk in the interim, and I think that the company will do everything they can to mitigate that risk. And I think that's very achievable to kind of stymie and reduce that risk. So I'm not too worried about that risk per se. I think it's there, present, but I think it's manageable and removable.
Okay, and how exactly? Like, what do you have in mind exactly?
I'll let Jake respond, but just FYI, he in the pins, his plan to SEC, or that was submitted to SEC, is pinned. If you want to review the letter in full, but Jake,
Okay.
I'll let you respond.
Okay.
Sure. So the plan is essentially to cut their existing debt significantly through the use of warrants and sort of basically giving people higher priority on the capital structure in exchange for lower debt amounts.
Okay.
And then sort of a plan to issue a convertible note that will essentially allow Bed Bath & Beyond to kind of sell some implied options there to kind of basically reduce the interest cost for Bed Bath & Beyond. So, yeah, so that's kind of like the summary of the plan.
Is it your idea, or did management mention that?
The plan is based off of my own idea.
Okay, so maybe they don't even think of it, right?
Yeah, I certainly just wanted to bring it to the attention of management and sort of the shareholders at large. Not necessarily to force anyone out or anything like that, just simply kind of make people aware of it. Certainly is an interesting play of financial engineering. I think the Bloomberg article that I saw certainly made me think that they were considering something along those lines. Hiring a balance sheet consultancy group would probably be something that you would do to kind of implement what I was kind of saying. So certainly, I think management certainly is not taking this seriously.
Got it. Well, thank you.
Great, thanks, Ina. I did have one question come in from Pete via DM. Again, if anyone else wants to chime in, I'm going to wrap in 20 minutes. Otherwise, if we get through the questions, I'll wrap. Pete had a question about whether the liquidity issues could be settled by selling off the bye-bye baby assets. Pete says, since it's assumed to be worth $5 billion, also, has he met with the other activist investor to see if their plans are the same for the company, or have they not met together to put their heads together? I know, Jake, we talked a little bit about the market conditions for potentially unlocking the value of the asset, being less than favorable when prospective buyers can see the company's challenging financials. But if you want to maybe answer the question about the baby business, and then also to the extent you're willing to respond regarding the other activist.
I'm not going to comment on the other activist. I will say, other than to say that ultimately, I think we both want what's best for Bed Bath & Beyond. It's a very fair thing to say. But commenting on the baby business, I think relying on the baby business to really solve the liquidity issue is it could be a long-term fix for liquidity. However, short-term, you're basically providing a lot of leverage to whoever is trying to buy it. Obviously, this is not a seller's market. It's really a buyer's market. So essentially, if we're really trying to rely on that, then buyers really have no interest in paying as much as potentially it's worth, because they know that Bed Bath & Beyond has to sell it, and they're kind of up against a ticking time bomb, so to speak. So the goal is to not fire sale the baby business. I think by giving its management some time and room to really figure out how to best unlock that value in baby rather than trying to force it out at potentially unfavorable prices is really, I think, the key here.
Yep. I think in a nutshell, ensure maximum optionality for the business, ensure that they have the liquidity they need to survive and remain solvent, and otherwise get the best possible outcome for equity holders. Hopefully is a good summarization of the discussion and the thinking going on behind the plan. I don't see any other questions in queue. I'll once again ask for any final questions before I hand the floor to Jake to give his any parting remarks. I don't see any hands going up. I don't see any DMs. Jake, please take us out.
Sorry, Rod.
Yeah.
I do have just one follow-up question. Are you able to make like can you sell a portion of your position, Jake, without triggering disclosure with the SEC?
That would be correct. However, I want to make it clear that my position is unchanged since the first day in which it was filed.
Got it. Thank you.
Yeah.
All right, Jake, please. Then,
Sure.
Final thoughts.
So I think ultimately, as I mentioned before, we all want Bed Bath & Beyond to succeed. And ultimately, I think there's a lot of disagreement among retail investors, sort of. But ultimately, I think we all need to confront the challenges and really come across with a solution. I think there are plenty of solutions out there. And, I really have been encouraged by how passionate the retail investor community has been about Bed Bath & Beyond. Certainly, the passion exceeds a lot of what I see in the more traditional finance side. So I definitely think that's a really positive thing. I think the fact that everyone's so dedicated to Bed Bath & Beyond, constantly tracking it, it really spells a good sign for the company over the long term. And I think, we have to figure out what the best thing is to do. But I think certainly having this base of, passion is really a really positive thing. And, certainly I know there's a lot of people skeptical of me and my intentions, and I probably can't assuage you of that anytime soon. But I really like seeing all your comments, both positive and negative. And, I lurk on a bunch of different Discords. I'm active on the GMED one, DD one. But, I see your guys' comments and I do consider them. And I certainly see the comments and I am certainly willing to advocate in some of them to various stakeholders who could potentially influence sort of outcomes. And, so that's kind of where I want to say. It's just sort of, it's a great thing that you guys are all really passionate about Bed Bath & Beyond. And certainly it's a community that I did not expect to really join. But I certainly think it's an amazing thing for Bed Bath & Beyond. That's all I really want to say.
Well, Jake, again, thank you very much for being willing to come and have an open discourse with retail investors on these various fora. I definitely think this aligns very closely with Wook's belief that crowdsourced research from retail investors can yield alpha in markets, and that the perspective of passionate, enthusiastic, and engaged retail investors is a constructive thing. And I'm glad that your experience has largely been positive, especially with regard to the GMEDD server. I encourage folks to check us out if you've not before. And of course, look forward to hosting more conversations like this in the coming weeks, months, and years to come. So thank you, everybody, for tuning in this afternoon. The recording will be available for 30 days on Twitter. I'll look to make it available elsewhere at a future date. I will make that public on Wook Capital's Twitter handle as well. And please, everybody, have a great rest of your evening.